Hello, welcome to Our Stock Trades. In this video, we're going to go ahead and do a detailed analysis on the intrinsic value of SoFi. Now, a lot has happened in the past 7 days, and I'm starting to go ahead and slowly start to change my tune on SoFi. It is starting to become appetizing, and I would like to describe to you and explain to you why. So, I've been a critic of SoFi for quite some time. We've talked about, if you look at our past videos before, on why I believed that the company was overvalued. However, now we're starting to approach a region where you really cannot, kind of scoop this under the rug. We need to go ahead and sit down and really have a one-on-one conversation here to talk about this company. So there is an investor by the name of Bill Miller. He's one of our legendary investors that we like to basically base off of our intrinsic value calculations, our teachings, and the whole thing of fundamental analysis that we preach and teach in the Mastering Stock Market course. So he, on average, has about 1.51% of SoFi in his portfolio on an average basis of a reported price of $4.88. And now we're under that. We're at a SoFi price of $4.60. Now, again, I said 5 days ago, something happened. A month ago, 5 days ago, something happened here. What happened? Why is the stock down literally 22% from this particular region? Okay, region here. Well, very, very simple. The reason why it's down is because President Biden, and by the way, if you're a SoFi investor and you already know this, but just for other people that don't know this, that not in SoFi, just kind of bring them up to speed, and then we'll take off from there. President Biden's administration essentially delayed the student loan repayment plan. And I think they're going to use that in conjunction to go to the Supreme Court to try to get the student loan forgiveness. I think that's kind of the plan there. But this essentially is hitting SoFi's top and bottom, honestly, line here. And this is why the market is pre-anticipating this decrease. Now, if you look at the price now, we're starting to get levels at which SoFi is, first off, in its 52-week low, number one. Number two, we're starting to get levels lower than what hedge funds normally buy at. And this is where, your ears got to perk up and you got to be greedy when others are fearful. But before you do that, you need to, have a plan. You just can't just buy, which a lot of retail investors do. They just essentially buy on the whim. I've been a critic of SoFi. When the stock was trading at $22, I told him, I was like, no, it's overvalued. I made another video around $15, $10 overvalued, $7 overvalued. And unfortunately, I got a lot of hate of that. This is not the video to say I told you so. No, this is a video to basically go ahead and we're going to do intrinsic value calculations, and we're going to show us different forms of price targets, and we're going to give you some high quality due diligence here. So, we got to go ahead and talk about SoFi here in terms of the financials. Now, why am I starting to change my tune? Well, if you look at the number of users SoFi has, it's increasing pretty incredibly. People that are in the stock, you guys know what I'm talking about, okay? Now, if you go to revenue here, and if you go to 2018 to 2022 here, TTM, you could start seeing the revenues going up. The gross margins are amazing. The only issue is the net income here is negative. So it is an unprofitable business. Now, if you go ahead and go to free cash flow, I'm not, too scared of, negative 500 million. But, negative 1.4 billion, that's pretty low. And then all of a sudden now we get negative $6 billion. So, it definitely is an unprofitable company right now. And there's a lot of risks to it. So whenever you have a company, this negative free cash flow, that definitely has a lot of potential that Wall Street definitely backs. I would say, this is a type of company where you don't want to go over the 5% threshold. According to Benjamin Graham's Ideologies of the Intelligent Investor, book written in 1940s and 50s, it's important to essentially find companies that have the high reward but high risk ratio to basically be under 5 to 10%, to be definitely under 10% for sure of one's portfolio. So let's, prefacing this. This is something that I am going to start taking a look at now, because it is starting to, come in my territory, and in undervalued territory, if I might say. But first, we must use our resources and our intrinsic value calculation to find at what level is a good price and how low can it go, like limbo, how low can it go? And that's what we have to calculate. So I already did the pre-calculations to just make life easier, and I'm going to explain to you how I did them. But first, if you go ahead and go to our intrinsic value software here, and if you open up the help menu, and if you go to price targets, now again, most people pay, monthly subscriptions to tip ranks and all these things. Again, we're a one-stop shop. This here, we have, it actually gives you the price targets of what analysts are thinking. And this is something that we've designed. So if you go to price targets here, and if you look up SoFi, I just want to kind of see where analysts think this is going. So we do see a target high of $22, a target low of $6, and a consensus of $10.83. So that's kind of gives me an understanding of where SoFi analyst projections are. But I like to do my own price targets. So what we did here is we took numbers from 2018 to in 2022, and we found a growth rate of 51%. Utilizing a 5% of the revenue to estimate the free cash flow, we get an average free cash flow of $49 million. But let's be honest, I don't think this thing can grow 51% for the next 10 years. I doubt it, but let's go ahead and assume it does. Now, one thing I did not mention is if you look at the shares right now, they did dilute, and we're talking a pretty sustainable amount of dilution here. But if you were to essentially use the diluted share outstanding shares of 917 million, you see a price of a recession of $4.20, which is indicative of what the price is currently trading at near there, with a bear case of $9 and a base of 13 and a bull of 20. But let's be a little bit more very strict. If you were to look at analyst estimates here, they believe the revenue growth is going to go down in 2023 to 33%, 33.6%. If we use this calculation, 33.6%, we do see now a stock price anywhere between a recession of $1.53, a bear of $3.23, a base of $4.46, and a bull of $6.60. So you can see here that these numbers look a lot different than this. Essentially SoFi has to grow at 51% year over year in order for this to make sense, which is why I was so adamant when I was saying, you know what, man, I don't think the stock is worth $22. People were like, no, it is. Retail investors, unfortunately, right? But now they've chilled out. A lot of the fast money has left the markets, and now more calculative investors are inside, really taking their time to find the valuations, a fair value of a company. So by looking at this here, and looking here, I'm a little bit more conservative. Yes, I would like to see what analysts are saying here. And, analysts were right on the ballpark here, 51% for SoFi. And, we calculated it based off of 2018 to 2022 numbers. But I would like to look at JP Morgan Chase. And I know that's more of a mature company. SoFi is a new company. I get it. But again, I want to be a little bit conservative. So SoFi's JP Morgan Chase is growing 8.6% projection for 2023. And analysts think also Bank of America. Oh, no, that's two Chases. So sorry, let me go ahead and type in Bank of America here. And let's go ahead and go to analysis. And let's see. Yeah, so about 8.9%. So we'll go ahead and we'll just do 9% because they are technically some form of a growth company. So we'll do 9% here, okay? And by doing that, we get a recession case of 37 cents, a bear case of 63 cents, and a bull case of $1.10. So definitely kind of freaky right now in terms of SoFi. Now, I don't think we're going to evaluate them at 9%. I do think 34% is going to be a good price to evaluate them on. Personally, if you want to be a little bit more bearish, I would do, a little bit conservative. I'll do 25%. Sorry, 25% here. And by doing that, you get a bear case of 184, a base case of 250, and a bull case of 362. Now, personally, for me, if you don't think the stock price can go lower than this, well, let me just kind of give you kind of a scenario here. Imagine if, consumers basically tap into all of their HELOCs and, they can't tap into their credit cards. And then consumers get to a point where they really can't spend any more money because we're and we're in a recession. And then people start laying off workers. And then all of a sudden these workers and consumers don't have enough money to essentially buy goods and services, which will unfortunately cause, Apple and Microsoft to essentially decrease the amount of EPS they expect for the given year because it's going to be an earnings crunch. That's going to cost those evaluations of Apple and Microsoft and Tesla, more so, honestly, Apple and Microsoft that have really helped held the stock market, if those drop, you can expect SoFi to drop lower. And it wouldn't be out of the ordinary to see stock prices near this level. So as of right now, I am going to dibble and dabble with SoFi, understanding that, $4.60, it's still a little bit up there because I am a conservative. I want to make the biggest bang out of my buck. And now that stocks are falling in line with their intrinsic value calculations, we are in control and we know when to get in and we know when to get out. Okay, so I think bull case and the base case here will be a very sexy opportunity to come in SoFi. And a lot of individuals now are starting to revisit their thesis with SoFi, which is good because when others get fearful, that's when I get greedy. Okay. And this is where things become very fun and appetizing because it's free money. Okay, so now that we went ahead and basically talked about this, we do have to mention that one of our legendary investors has an order around $4.88. So there is some value to this. There is some value. Now, if you enjoy this content, please consider subscribing, liking, commenting, and sharing. And as it will help with the YouTube algorithm. Likewise, we do have our Black Friday sale link down below, coupon code Black Friday, which gives you lifetime access to our Mastering Stock Market course and also our software data of 30 years of information, all the information that we offer here. We have been featured on Bloomberg, NASDAQ, Yahoo Finance, MarketWatch, and Benzinga. It's always a privilege and honor to serve you guys and essentially to help the retail community thrive in such an uncertain market. I will see you on the next one.